Marc Ostwald is Chief Economist and Global Strategist at the independent brokerage firm ADM-ISI. Marc, good to see you. Welcome back. Let's just start with this phone call between China's President Xi and US incoming President Donald Trump. The two apparently in this phone call talked about many things, but they talked about trade. Given the possibility of US trade tariffs on Chinese goods imminently, what are you looking out for?
Well, I think the first important thing is actually everyone is much more willing and ready to engage with the new administration in Washington. And that is actually a positive relative to the start of 2017. I think the most important thing is the communications channels are open. But they were open, for the last during the last Trump administration, and there was still a lot of trade tariffs. But I think everyone's actually now realizing that, just having wholesale tariff imposition is actually not going to be good for either China or for the USA. So I think there's a lot more room for discussion and negotiation than perhaps people give credit for.
We'll have to wait and see over coming days and weeks, obviously. Let's just drill down on the China story today. China's economy growing by 5% in 2024, hitting its target, and yet many people in China seemingly complaining about flatlining living standards. What does that disconnect say about the Chinese economy?
Well, it basically says it's still very reliant on investment and industrial production. Industrial production is actually growing at a faster trend rate now than before the pandemic, which is impressive. But it is coming on the back of a lot of stimulus, i.e. debt, basically. And external demand has been strong. The consumer side, I think, there are two factors which have contributed to that. One, wage growth has been poor. Which doesn't help the feel-good factor. And secondly, there are still numerous concerns about the property sector. And given that Chinese consumers' savings are very much geared to the property sector, that doesn't help confidence either. So addressing that problem, it won't be done with a flick of a finger or a magic button, is basically still the key challenge.
Despite those stimulus efforts, domestic consumption still lagging behind industrial output. Why has it been so challenging to shift towards a consumption-driven economy?
I think the biggest problem lies back in the sort of 2019, 2020, well, 2018, 2019 period, when there was a lot of tightening of regulation. And that dented both consumer and business consumption and confidence. And as much as some of that has been relaxed in the meantime, I think there is a fear that it could be repeated at some point in the future. And that really, without rowing back on some of that regulation, and dare I say it, go large or go home in terms of stimulus policy, getting this transition is not going to be that easy.
Marc, good to see you. Have a good weekend. Marc Ostwald, Chief Economist and Global Strategist at ADM-ISI.